start with Safir first. If this book is an orchestra, Safir is the conductor of that orchestra. Safir, it's very easy to get a lot of people to come and say, this was my biggest success in life. This is where I got it right. These are the things that I've achieved in life. In this I told you so world, how did you convince every wizard to actually confess in public what they wouldn't even admit in private?
Thank you, JLF, for having me over, and to CNBC. When I reached out to all these legendary people, most of them were initially reluctant because they said that, this is a topic which is a little bit of a gray area, and sometimes there are issues to do with regulator and compliances. But they're all wizards that wanted to share knowledge. And they've all had a beautiful innings which is continuing despite all the mistakes that they make. And I told them that if you are heroic in a true sense, then the chapter is not completed until you share, where you slip and where you rise from. And the moment I put it across, they said, okay, we will contribute, we'll see how it's going. The good part is that as they started writing more chapters about the book, they said that they are becoming better learners themselves. So I think the learner in everybody was awakened. And surprisingly, other than for 3 people on compliances, I didn't have a single no. So it was wonderful. And I really thank all the 26 people.
You want to tell us who the 3 people were?
So
I'm just kidding.
Well, fair enough. I'll explain to you. And I really wanted them to be in the book. One of them had a young baby. So I could understand that, the time was not available. One of the largest fund managers just migrated away from an existing fund into new and said that it will reflect as if I'm talking about my previous job, which is very understandable. And the third person actually had a unique problem that wanted me to come to Mumbai at least 6 or 7 times for narratives. And I said, I also practice law, so I can't be there too frequently.
Right. So typically if you go to any of the business schools, etc., they have case studies. Unfortunately, we don't have any case study which is live, right? Those case studies are in the past, and hindsight vision is 2020. The beauty about this book is this is an evolving case study. Like he said, that people are learning while they are making their mistakes. And these guys are legendary investors, but they're also still investing in the market, and may you all continue to do so as well. So this live nature of this book makes it a lot more fun. And the second part is that they've been fairly candid. And let's start with Mr. Kedia himself. Everyone speaks about how they learn from successes. Can you give us an idea of what some of your early failures were, or what mistakes did you learn from, and what did you learn from them?
So let me tell you, of course, there had been many mistakes. But what I have understood in my life, that mistakes also, it has 2 words, miss and takes. So ultimately what you miss, but it depends on what you take from what you miss. So that is why it is called mistakes. So coming to my life, there had been many mistakes. And one more thing I have believed, I read somewhere, that every mistake give you some lessons, okay? So if you learn the lesson from the mistake, then it is not a mistake. So this is still going on. So I cannot, pinpoint, or I cannot elaborate. But the biggest mistake, what I did in my life, was one that I started my career into stock market from trading in F&O, future and option. But later on in my life, I realized that, in trading, I can run only maybe 10 meters or 50 meters or maybe 100 meters. Beyond that, it is not in my capacity to run a marathon by adopting future and option trading in my life. This I had realized, but I realized it after 10 years in my career. When I started investing when I came into this market, it took me 10 years to learn this thing, that I am not cut out for this future option and trading and all. But it took me another 10 years to come to this conclusion, or to win over my habits or whatever you call it. It took me another 10 years to stop trading, in the market.
Basically, it took you 20 years to stop trading in the market.
And the biggest mistake was this, after realizing this thing, what happens now, you don't realize your mistakes till you leave sometimes, That is why we say that the biggest learning from others' mistake is the best thing in life, because if you will learn everything from your own mistakes, then your one life will be very short, right? So I realized this thing after 10 years, that it is not for me. Even then it took me 10 years to win over it.
और कई बार वो कहते हैं कि स्वर्ग जाने के लिए खुद ही मरना पड़ता है, किसी के और के मरने से नहीं जा सकते. But you know, a lot of people entered the markets after COVID. It's been just 5 years. A lot of them open their apps every morning and they want to trade. It took him 20 years to realize that that is not for them. So if you want to save 15 years of your life, just learn it from him right away. Gautam, your biggest mistake, if you can get a little more specific, what did you learn from it, and what would what should everyone here take away from that?
Yeah, I think just to add to what Vijay said with respect to F&O, I think India is probably one of the best long-only markets in the world. And I don't know if you're going to agree with me, Vijay, but the fact is, if you pick the right stocks and hold them for the next 5-10 years, or as I tell certain investors, buy the right stocks and go take a 5-year vacation and come back, you would have made anywhere from 3 to 5x or 10x depending on the stock. So my view is that India is a great long-only market. And I'll give you another anecdotal evidence of what I'm saying. Over the last 10 years ago, we had 175 companies with a market cap of over $1 billion. Today, there are 550 companies with a market cap of over $1 billion. But of course, within those 10 years, a lot of those companies did not exist in terms of being listed. They've got listed. But even subtracting for that, if you look at the absolute amount of money people have made by simply holding on to good quality companies, it's been a grand success. So that, I think, is lesson number one. Lesson number two is, I think, in terms of valuation, and I've found this from time to time, and I'm going to give an example of which I've written in the book, is Dixon Technologies. So Dixon, I think we did a lot of work on it. We met the management, and when the stock was about 4,500 rupees a share, he said, no, it's too expensive. Great business, great management, it's too expensive. Stock went to 8,000. We said, oh my God, this is out of control. All the best to the people who are looking at buying it. Finally, the stock, to cut a long story short, went to 19,000. And we missed one of the biggest bull 10-bagger stocks in recent history in the Indian equity market. Now, where did we go wrong in this? And let's understand and appreciate what are the lessons from this. I think the key lesson is there are stocks that are going to be expensive in India, whether you like it or not. Do not use Western metrics to value stocks in India. And I've told this to foreign fund managers as well. If you want to invest in India, be ready to pay more for good quality companies. Again, there is at one end, there's a Varun Beverages, which trades at 45 times 12-year forward earnings. Okay, very expensive. Why don't you just go and buy PepsiCo? So it's the bottler. For those who don't know, Varun Beverages is the bottler and distributor of PepsiCo's products. They have a 92% market share in India. So people would say 45 times, oh my God, I'd rather go buy PepsiCo. But you know what? This stock is going to keep multiplying. Why? Because it's the best way to play the electrification of India. And what I mean by that is, over the last 10 years of the Modi government, to give them credit, they've done a phenomenal job of electrifying our small towns, our cities, and villages. So what does that mean for the sale of soft drinks? You can now serve a soft drink cold, i.e. now people can buy a cold drink. Earlier there was no electricity, or the electricity was for very few hours of the day. Varun has deployed 1 million Visi coolers, small refrigerators, which actually cool the Pepsi Cola, Mountain Dew, Tropicana juices, Aquafina water, etc. All of these products that they make. So there are stocks in India that are going to be expensive, whether you like it or not, and will remain so for the next 10 to 20 years. Let that not be a reason to not buy the stock.
All right. So if it is expensive, the underlying size of the opportunity is good. The company is growing very fast. And with the benefit of the underlying growth in India itself, it would be a multi-bagger, no matter the current valuation. But that is exactly, opposite to what, say, someone like a Ravi thinks, his company Value Quest. And that's the beauty of the market. Divergence of opinion is what makes the market. Ravi, what have you learned? Have you learned about not investing in companies which are trading at high multiples by burning your fingers once?
Thanks, Mangalam. And first of all, thanks to Safir and congratulations on the fantastic book. I must say that, we have all grown up reading Warren Buffett books, Peter Lynch books, or Jack Schwager, Wizards of Wall Street. And there is a dearth of good content on Indian market wizards. And I mean, of course, I'm honored to be part of it. I don't think I've made enough mistakes in my life to be part of this, but there's a lot many more mistakes that I still have to do. Thank you so much for having such a wonderful book out there. Coming to your question, we all make mistakes. So first of all, I think people miss on the basic thing that investing is a probabilistic exercise. Now, what do you mean by probabilistic? There is a probability you will be right, but there is also a probability that you will be wrong. So by definition, you're going to make mistakes. But what I believe the biggest mistake would be is to not learn from that mistake. You really, I have had the good fortune of working under the aegis of Rakesh Jhunjhunwala, late Shri Rakesh Jhunjhunwala. And one thing he encouraged all of us was to make mistakes. And he literally did that. He gave us back 20 years back, he gave us a 10 crore fund. You go, make your mistakes. And I have never heard anyone say that, yeah, I'm giving you money and make sure you lose it all. It was a big daunting thing. I didn't understand at that point of time. I was naive. But essentially what he was doing is he was actually making sure that we make those mistakes, because mistakes are your opportunity to learn. And if you don't learn from it, that is the biggest mistake. Otherwise, all these textbook mistakes of overpaying or buying a wrong kind of company, all those mistakes, you will quickly learn from it. But if you understand the main concept behind why make mistakes and why learn from them, because investing is the ultimate liberal art where you actually keep learning lifelong and you actually get better with age and experience. After the age of 60 also you can continue pursuing it. There are very few things in life that you can pursue. So it is very important to remain that teachable, curious, learning, whatever you call it. And thanks to Anand for bringing this book out, because you learn most from your mistakes. Yes, we all would want success, but success is a poor teacher. Failure and mistakes are a great teacher.
Thank you for giving us the headline for Jaipur Lit Fest. For all of them wondering why is there a stock market discussion here, he said, investing is the ultimate liberal art. So all those who are wondering why finance is here, because investing is the ultimate liberal art. I'm tempted to ask you a follow-up, because Rakesh Jhunjhunwala always said, the guru that he was, that, make only mistakes that you can afford to live another day, to make another mistake, but then again, don't die by that mistake. Make only mistakes that you can afford. What exactly happened with that 10 crore fund that he gave, and what were your learnings from
I ran it to the ground.
What did you learn from there?
No, so very rookie mistakes. Still, I was barely 2-3 years into the market. So
give us some masala. We're in Jaipur. Come on, kachori. We need that masala.
No, I'm not going to name any company, but trust me. I have been gullible as gullible you can be, where I believed managements on face value, and I really believed what they were saying. As it turns out, you have to have a little bit of skeptical gene in you as well. Of course, Rakesh Jhunjhunwala has these 10 commandments of investing, and the number one commandment over there is you have to be an optimist to be an investor. So I was trying to be optimist, but I didn't realize that you have to have a dose of realism and skepticism along with it. Otherwise, you're going to be taken for a ride. And I learned it the hard way. So I'll not name a company, but there was one pharma company which used to make injectables. And I went and proposed to Rakesh ji. I was an analyst covering pharma for him. So I went and proposed that this is a company we should be looking at. It's a fantastic company, and it will do wonders. I had my all pitch and everything ready. And he heard me out very, very patiently, gave me a good 1 hour hearing. And after that, he told me he's a fraud.
How did he get to that conclusion?
And then I really thought about it, and I went and dug up the balance sheet. And soon enough, in the next quarter, he had told us that, his EPS will be this, that, whatever. And when you dug a little deeper, that you realized all that was just other income. It was not core earnings that was coming out of the business operations. And he was lying through his teeth. And that kind of judgment, that kind of ability to judge people or the situation, of course, it comes with time and age. But I was just taken aback with what was thrown at me. And I'm glad, because this was a big learning for me not to take things at face value.
All right, Vijay ji, not to take things at face value. Have you had any specific example where someone told you that this looks good or this looks bad, and then you went ahead and sold it or bought it, and then only left with losses? or loss of profits?
No, I will tell you, I was, I must have heard what Ravi is saying, so I become little smarter. I will tell you the one opposite thing. Again, I am not going to name the company,
Yes.
but I will give you one example. I had bought one company, maybe say around sub 100 rupees.
Okay.
And all. And a big quantity as per my financial
Which
capacity.
is super big quantity.
Yeah.
For him, if it is a big quantity, then yeah. Okay, go ahead.
So as per my capacity, it was maybe one of the biggest investment at that point of time. So like suppose I bought at 100 rupees, sub 100 rupees and all. So, and the market used to swing a lot. You had 200 rupees, then 150, 300, and 200, 400. So I was little, little nervous. So somebody told me once, a neighbor came to me and he told me once that he knows the CFO of the company where I am the largest investor, individual investor.
Wow.
So my neighbor suddenly came to me and told me that he knows the CFA. Would you like to meet? I said, when I bought the shares, I did not meet the management. I don't want to meet him. As it is, I don't meet the management because I mostly invest in mid cap and small cap. And I think that the management himself, they don't know what they can become. They don't know about their company that much. So I said, I don't want to meet him. But he insisted, कि just एक बार आप खाली मिल लो, खाली hi, hello कर लो, ऐसा कर लो, वैसा कर लो. तो ठीक है, तो मैं बोला ठीक है, चलो मिल लेते हैं. तो मैंने उनसे मिल लिया उनको. तो at 500 rupees, तो मैं उसको बोला कि I want to sell some shares in the company. वो बोला नहीं, you keep it, I will tell you when to sell the shares.
Oh, wow.
At 500 rupees, one day he's calling me, the guy CFO of that company is calling me and telling me situation is not good and you should sell your shares. And since you wanted to sell the shares, I can get you some buyer also. So tell me when you want to sell the shares. So I said कि मैंने तो इसको पूछ के लिया भी नहीं था. अब इसके बोलने से मेरे को बेचने का भी नहीं है. So I don't want to sell the shares. Then again he calling me after 2 days कि what did you decide? I said no, I'm not going to sell. After that share price became 10,000 rupees.
Oh, wow. But, on this itself, another follow-up that I have to ask you is that a lot of times you said that, managements themselves don't know how big the company will be because they are probably too focused on running the daily job of the company to not look at it from a macro standpoint as well. There have been times, and in the last 2-3 years, the kind of rally that we've seen in PSU stocks, thereafter they've seen a decline, etc. as well. I believe that you met an employee or an ex-official of a PSU company who was not very bullish on that stock, and as a result of which you exited. Tell me that story.
Yeah, that is another side of the story. I bought one company again at 150 rupees or something, and maybe I bought a reasonable quantity, not whatever it is. So at 200 rupees, I got to meet one gentleman who was an ex-IS officer. Okay. So he was asking me, he was retired. So he was telling me, yaar, mere ko kuch share batao. I am also very much interested in the stock market, investing and all. So please tell me some shares. So maine usko bola, I can tell you from your own state, this is the company I have bought and I like this company because they are going into this and this, blah, 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 whatever I had read. I just narrated, I said, कि this is the company. वो मेरे को अरे क्या भाई what you are talking ये rubbish है ये बकवास है this is all bullshit and they are going to do nothing this and that all negative things he started telling me. I said okay, since he was an ex-IS officer I sold all my shares. Oh. And in 20-30 days share went up to 500 rupees.
Oh. Okay, so there you have it, error of omission.
So this is what actually I have written one song, किसी को भी ना समझ में तू आए तो घटता तो बढ़ता क्यों गिर जाए ये 90%.
You want to sing it? You want to sing it? Huh? You want to sing this?
No, I'm just reciting.
गुनगुना दीजिए.
किसी को भी तो ना समझ में तू आए तू बढ़ता क्यों गिर जाए ये 90% लोग क्यों पैसे गवाए जो सोचा समझा खूब समझ में आए जो लेके गए बैठ वो ही तो है कमाए ये 90% लोग बैठ न पाए आंखों को खोलो भैया थोड़ा तो सोचो भैया 10 में से 9 लोगों का खोता क्यों है रुपया.
Wow. You guys are clapping for the song, but don't forget to clap for the learning inside the song, right? This is a lot of gold dust that he's giving it to you, packed in a tune. Don't look at just the tune, but what he's trying to say inside it as well. You spoke about some of the mistakes, some specific mistakes, Gautam.
Yeah.
We've spoken about learnings from mistakes, but as Ravi pointed out, that, success is a poor teacher, but I'm sure it is a teacher. What have you learned from some of the successful investments that you've made, and that has become your framework right now from an investment standpoint? If you could give us some specific examples there as well.
I'm going to give you a sort of confusing answer because there is no one way, I think, to look at a company. There are multiple factors. Like I said in my earlier comment about valuation, and valuation can be high and the stock can still do well. Valuation can be low, stock will not do well. So I'll give you an example of another anecdote which I've put in the book, which is on Tata Consumer Products. And when we looked at this company back in 2019, early 2019, the ROE of the company was about 4.3, 4.4%. Number one. Number two, the company was run by an ex-Indian Hotels gentleman, a really nice person, but not sure he was the right person to lead this company into the next phase of its evolution. And number three, we went on something which Chandra, who had recently, about a year before that, become the chairman of Tata Sons, and said, I don't want to see Tata companies in more than, I want to see consolidation in businesses of Tata companies. I don't want to see two Tata companies competing in the same business line. So we took that literally and said, if he's got that vision of the group, then maybe there's something that's going to happen with Tata Consumer Products, and it did. So we saw a bunch of changes that happened. Again, we run a special SITS India fund. So as a result, for us, this were multiple special situations happening in this company. And, so the low ROE of the company did not stop us from spending time and starting work on the company. And what they eventually did was they took the Tata, the consumer products, the F&B business of Tata Chemicals, which ironically is a chemicals company, but had become the largest salt brand in the country. I'm sure a lot of you use it, called Tata Salt. And they got into condiments, they got into spices, again, branded spices. So they merged all of those businesses, moved them out of Tata Chemicals into Tata Global Beverages, as it was known then, and then renamed the company, brought in Sunil D'Souza, who is a legend in the consumer business, 2 decades with PepsiCo in Asia, came back to India in, I think, early 2013, turned around Whirlpool, and so they replaced the incumbent and brought him in, and the stock basically has gone up 5x. So the learning from that really was that don't be focused on a low ROE. Don't be focused on a high valuation. It wasn't high valuation at the time when we bought it, but there is no right answer. We see so many stocks that work for a variety of reasons. And if you were to ask me, Mangalam, which of these would you say work the best? Unfortunately or fortunately, everyone is a separate case study.
Right. Everyone is a separate case study. And Sunil D'Souza, for all of you who know the success of, the energy drink Sting, because of which Varun Beverages became what it became, Sunil D'Souza was the one responsible for starting Sting in Indonesia or Malaysia, one of these Far East companies, because there wasn't enough volume growth out there.
Yeah, I want to add one other thing. Unlike what Vijay said, we do go and meet companies physically at their offices or in their factories. The good news about going to factory visits is that the person meeting you there, that the local manager, is not tuned to talk to investors. So he or she will end up sharing more than they should be, which is good news, by the way. The second element of that is that when we meet the promoter, we always try and see what kind of a car's parked outside. We ask the security guard, "Saab, kitne baje office ka aate, kitne baje nikalte?" 12 baje aate, 4:30 baje nikalte, not good news. Unless, of course, they have a very great and kick-ass CEO, professional CEO running the business. That's another matter. But for us, I think physically going to the office, to the factory, tells you a lot about the culture of the company and the way the promoter behaves with employees. And, as to your point, as we were discussing earlier, are people actually working, or, is this a setup?
Yes, please.
I just remember one thing. Sorry to interrupt.
No, please.
On your thing, I remember one thing. I went to meet one company. It's not that I'm meeting any company. It is not that I'm avoiding them. Sometimes, and it was arranged by one of my friends who had invested, bought a lot of shares, percentage money. He is the biggest investor in that company. Again, I'm not going to take the name.
Yes.
Had insisted me that you see the company, they are the second largest in their field. Okay.
What field is this?
Well, I don't know. So, by tu jidhar pada, main udhar ka headmaster. Okay, anyway. So I tell you, Gautam, I went to meet the company and the management told me that 4:30 or 5:30, वो उसके बाद में phone बंद कर देता है. You know, this is what he told me. And he was a little ill also, sick also. Some sickness, he was having like diabetic and all, whatever it is. And he said that 4:30 or 5:30, I just shut my phone off. And after that, I don't take any call. And so मेरे को ये लगा कि my God, like you said, 5:30, it shuts off his phone. That how he's going to run the company. I did not buy the shares. Believe me, in 5 years, went up by 10 times.
Divergence of opinion is what makes market, right? I told you. So, Ravi, what do you believe is one of your most successful decisions? And what has your biggest learning from there been?
So I'm going to give you an example which has a flavor of both failure followed by a success. We had invested in a company, and over here I'm going to go on a limb and name the company because pretty much all of it is in the public domain. This was a subsidiary of a Japanese company, and there was a huge fraud in that company. We were a minority shareholder in that company, and the fraud was to the tune of almost $300–400 million. And the parent ended up investing that kind of funds into the company. And at some point of time, they got tired of it and said, let this company go to the bankruptcy court. And they let that company go. We were minority shareholders. That parent had always got the best corporate governance award that is out there every year after year. And here is a subsidiary of that parent, and there is a massive fraud committed. So that was a big shocker for us. But that is the mistake part of it. That is the failure part of it. What we decided is that this is not, and when I say we, I'm talking about my brother as well, and I'll give a lot of credit to him as well, is that the mistake was optional, but failure is not final until we accept it.
Yes.
And we decided to actually bid for that company in NCLT. We took over that entire company. It's been 4 years, and we have turned that company around, and that company is profitable. And we deployed far more capital in the company, and it's been a 100-bagger for us from there. So even though it started off as being one of the worst mistakes of our life, it ended up as being one of the best success of our life.
It's a wonderful story, and that exactly is what this book is all about. Confessions of Stock Market Wizards, right? You don't become a wizard by just touching everything and that turning into gold. You just got to hold it, ensure that you give it the sort of, care and need that it is. Investment is not about, buying something and that turning into gold, but instead it is all about planting a tree and watch that grow itself. So far, what we've spoken about is all buying decisions. Now, the bigger mistakes also happen in selling decisions. There are times when you don't sell and the stock falls. There are times when you sell too early and the stock continues to rise. So if there's something that you learned from, your exit decisions as well, because errors are of omission or commission. या तो मैंने वो share लिया और वो नहीं चला, या तो मैंने वो नहीं लिया और वो चल गया. वैसे ही जैसे if I sold it and it rallied more, if I didn't sell it and it started to fall. What have you learned about exits from your journey so far? And how to time one's exit?
So basically, my approach is very simple and straightforward. I don't have any price target. I don't have any time target. So I had been rewarded with this principle, and I had been penalized also with this principle. Now coming to the penalty part, I'll tell you that one company I had invested before COVID, way back, maybe 7–8 years back, say at 50 rupees. So after COVID, it went up to 1,000 rupees. And I did not sell any shares because that time, if you know, this company is into e-commerce and all. So after COVID, everybody was into e-commerce. That was the only way one can trade, one can buy, one can sell. That was the only flavor of the century. After, so it went up to 1,000 rupees, and stock price has also become very expensive, quoting as 60–70p. But people were talking about 100p, 200p, this and that, all those. The Zoom ka wo jo company tha, that was also trading at 400p or whatever it is. So this is what I also got carried away. कि अभी ठीक है 60 अभी तो picture अभी बाकी है. So this is what I also thought. Now today shares is 270 rupees. You know. So you in life what I have understood, no Mangalam, you don't get answer to everything.
Yes.
You know. And one thing more I have learned in stock market that you have to follow one policy, one principle. Sometimes you will get a positive return, sometimes you will get a negative return. I am not so smart that every time I can change my policy. Okay, for this stock I have different, because all my stocks are only for long term, for an indefinite period.
Yes.
So for me it is very difficult. Sometimes, of course, I do take actions. I sell some of my shares, but sometimes I don't. So this is okay. This is what we learn and we don't learn. Whatever it is, you have to accept it. You know, because your input could be same, but output every time in market is different.
Totally agree with you. We'll talk about the biggest learning that I have got from whatever little I've learned from all these people over the years is that you can never judge the quality of a decision by the outcome of that decision. If you don't understand that, I'll tell you, if I ask you what according to you was the best decision of your life, chances are that you will tell me what was the best outcome of your life. Right? If you're walking down the Jaipur Lit Fest and you hear Vijay ji talk about some random share, you go ahead and buy it. You make money. Was that a great decision? No, that was a great outcome. Right? On the other hand, if you do your own research, if you speak to a lot of people, you try and understand, do your own analysis, invest in that company, you lose money in that. Was that a great outcome? No. But was that a great decision? Perhaps yes. So that's something that Vijay ji has been, trying to explain to everyone. And that, I think, if the earlier one learns in life, the better it is. What about you? What have you learned from exits?
I'll give you an example of a specific, very, very, very big fund manager in India running, I don't want to give too much away, but a large domestic mutual fund. And we were once chatting about Shree Cement. I just brought up Shree Cement. I said, what a great company. He says, please don't talk about Shree Cement. It gives me depression. I said, did you lose money in that stock? Because it's hard to lose money in Shree Cement, at least until recently. And he said, no, I bought at 70 rupees, 9.9% of the company. And when it went to 700, I sold all of it. And I regret it because the stock now is 27,000 rupees. So timing, I think, is all about, and I tell my kids the same thing. Life is all about timing. And also, I think it's important not just specifically to stocks, but, who you choose as your life partner, who you choose, to work for you. A lot of decisions really are all about timing. It extends beyond the stock market.
All right, extends beyond the stock market. Something that you learned from an exit?
So, there is a good quote by Peter Lynch, which I don't remember the exact words of. I'll just paraphrase. But basically what he says is that market's job is to basically scare you out of your positions. And I experience that day in and day out. Every day, you will get 9 things that scare you. Whether it is a war happening somewhere, or whether it is an IT raid happening somewhere, or whether something or the other is happening. And markets are designed to scare you out of your position. So do enough work, develop enough conviction to not get scared out of your position, because as you can see from all the examples that everybody is giving, that it is the holding that makes you the money, not the exit. Yes, of course, there will be some that you will end up holding the can, and those will be bad ones. But at least the biggest mistakes of our life has not been the one that I bought and I sold. It's the one that I bought or sold too early, or did not have the conviction to buy enough. And from that perspective, of course, I consider Bajaj Finance to be one of my biggest mistake of exiting too early, and for frivolous reasons like it's too expensive, 4.5 books. We have never seen these kind of valuation. In hindsight, of course, do not make valuation your only reason for exiting a stock. Yes, of course, there are times when you need to take a call that, market has gone bonkers, everything is crazily valued, and one should be exiting or getting some money on the table. But those are once in a decade kind of decisions, and do not be in a hurry to take that kind of decision. Even during the recent corrections, a lot of people have been bearish and saying that this is, we are stuck in some kind of a slowdown in economy and valuations are very expensive. For sure, those things are true. But getting out of your most highly convinced ideas will be the biggest mistake you will make, because markets are going to correct 10%, 15%. And that has been my learning. you need a real solid reason to get out of a particular company, and it cannot be linked just to valuations. There has to be either the capital allocation gone wrong, or promoter and your interests are not aligned anymore, or the third reason is, of course, that markets are bonkers and they are paying you 10, 20, 30 years out.
All right, we take that point completely. I would also like to thank you for saying markets are designed to make you scared or get out of your position, and you did not say media is designed to scare you out of your position, because that's what we often hear. But to Gautam's point on it's all about timing, everything is not just the market, but beyond that also. So the final point is that what have your learnings from life outside of market been that have actually taught you to be better investors, or that have influenced some of your investment decisions?
Yeah, I think I had the good fortune of working at Reliance Industries in their corporate finance and M&A team, and directly under people like Manoj Modi and Mukesh Ambani. I think the vision, and I'm not here to market Reliance Industries, it's a great company, but the fact is, the one thing that they've gotten right over the last 45 years of their existence is the fact that what is the TAM, total addressable market. Please remember that, ladies and gentlemen, TAM is very important and it's very relative. So if you look at, I'll give you an example. Mercedes-Benz in 2024 in India, all models from A-class all the way to S-class, SUVs, everything included. Now, I'm not talking about Bharat-Benz, just the passenger vehicles. They sold 18,500 cars in India. I'm not sure if this was their original vision, but if I were to compare like to like, in China, they sold 7.5 lakh cars. So that's the understanding of what exactly is the total addressable market in India for a product. And we have to get realistic about that, because the audience here, a lot of them can afford Mercedes-Benzes. A lot of them can afford Colgate toothpaste, okay? But let's get real about what is it, what is the total population addressable market and how much can they afford. So the one thing that Reliance has always gotten right is the TAM is X. Let's say I'm giving you an example, 10 million people. If you bring the price point down by 90% of this product, what does the TAM become? And that's, I think, the way to understand when you meet companies, that what is the actual addressable market for the product this company makes? How big can this be in the next 5 to 10 years?
Total addressable market. Incredible insight out there. And that actually smoothly flows into what I'm going to ask Mr. Kedia as well, because you understood the total addressable market of a sector by just walking down the airport, I believe.
Yeah. So this is what I learned, one very important thing in my life. By walking at the airport, I realized that the dramatic change has taken place in India. And the thing which was once supposed to be very luxurious segment had become necessary. It had become...
That's flying.
Yeah, that was, of course, flying. So I learned a lesson that when luxury becomes a necessity, that is the story to be watched in India. And we can take the clue from the past. The same thing happened in telecom companies. Like telecom companies, all the mobile and all these came maybe in 95 or 94 or 96 or something and all. And there were 16 companies at one point of time. And we used to pay 16 rupees for outcoming, 16 rupees for outgoing and all. And finally, by 2014 or 15, there had been only 2.5 companies that Jio came into the picture after 2014, I think. 16. And of course, Bharti and Vodafone and all. And it was almost free, like ARPU, 100 rupees, 125 rupees ARPU. But see the growth of Bharti Airtel, and see the growth of Jio Telecom, who's the world's biggest conglomerate invested in that company. So same thing I applied into airlines also. When I saw the kind of people started traveling in airlines, I remember earlier, 20, 30 years back, when women would travel by plane, they would go to beauty parlor first. And then after they would go into a plane, and people would wear, oh, madam bhi yahi karti thi, hans rahi hai madam bhi.
That's my wife, by the way.
Oh, sorry.
So, you know, this is what both stock market and spirituality are all about. All roads lead to just one place. You have divergences of opinions, but eventually wealth creation is what you're looking at. He spoke about working with Reliance, bringing down the price point, increasing the total addressable market. He spoke about, you know, when luxury becomes a necessity, it brings you a big market opportunity. Eventually, what did that lead to? Telecom, aviation. What did Reliance do for telecom? Reduce the prices, increase the TAM. So all of them led to the same place itself. It is all a full circle. So let's complete that circle. Ravi, what have you learned from outside the market in your life that has made you a better investor?
So I won't say it's really outside the market, but you know, as an analyst, we tend to judge the quality of a business by the margins it make, and higher the margins, better the quality of the business. But what I learned is much later in my life, and I curse myself for that, but it is not the margins that matter. It's the return on capital that matters the most. And I don't know, you know, you might know Avenue Supermarts, which is
Yes.
D-Mart. When it got listed, it was listing at about 25,000 crore market cap, and it seemed like crazily expensive at that point of time. And you know, this is a business where you're barely making 3-4% margin. And I just, for the life of me, could not understand how can this business be valued so highly. But what I understood is, and you know, there is a very banya mentality to it. Any business which cannot be taken away by throwing money at it, basically what it means is it has very high entry barriers.
Yes.
So that is the number one thing. And the other thing is, how much money can you deploy and how much money can you make out of it? Again, that is a very banya mentality. But if you get those two understanding right about the business, then you will understand that finally, again, investing is not very formulaic, and you cannot be reductionist about depending on only one or two variable. But if I have to give priority, then it's the combination of growth and ROCE that matters the most in an investment horizon. And that I learned from Motherson Sumi's promoter, Mr. Vivek Chand Sahgal, in one of the lecture that he was given, that he had a laser sharp focus on return on capital employed factory-wise. And I think that was a big learning that I got.
All right, that's great learning. So what I'll do is before we open up for one question at best, I'll you know, let the conductor of this orchestra take the last beat as well. Safir also is a man of many interests. Yes, he is a lawyer by the day, an investor by the day as well, 9:15 to 3:30. Thereafter, he has his taste in fashion, music, all of that, a multifaceted personality. Safir, what about, you know, life have you learned, and that has made you a better investor, a better business person? And what have you learned, you know, through the journey of this book itself, if you could summarize it?
You see, I chose fund managers here because they had live money at stake, and their mistakes are in public domain. So therefore, it is easier to correlate to the mistake. There are a lot of mistakes in life that don't come out in public domain. You know, you don't get penalized because here it's public money, in the sense if my fund manager doesn't do well, I pull out money, and he may actually be supporting the fact that I should be putting money, but I'm acting contrary to his own interests. In that sense, I'm not even being a true partner. Why I chose to write the book, despite being an IP lawyer, is I don't manage any funds, and therefore I don't have this fund manager role, is because I felt that the word investment can be correlated to your life, your health. It can be correlated to behavioral science, decision making, anything. And what this book has done, as of now, I'm the only custodian of all the 26 chapters. So I'm privy to all the 200 odd mistakes that are discussed in the book. Is that it is making me realize that even the decision making that I have to do, which could be legal, for example, I have to become, I have to weigh all the consequences of lateral thinking. And when I'm able to put that lateral thinking to work, so it's not necessary that you will buy this book and you may do well in the market. That is one thing, but you may also become a much more considerate thinker and mitigate risk in a true sense. And being a student of economics from one of the top universities or colleges in the country, I realized that it is really sad that there is no topic called risk that is taught to you in a subject in school. And risk is the biggest hindrance in a volatile world to your success. So this is essentially a endeavor to sort of bridge that gap. And like I said, I've got the benefit of a lot of smart people and who've contributed immensely to this thought process.
I had to summarize all of what they had to say. You know, this book is a 699 rupee book, so don't let the valuation of this deter you from the value that this may bring you, because at best, it will, make you a great person. At worst, it will make you a great investor. It is an absolute win-win. So that's all that we have from, this session so far.
Mangalam, I'll just add.
Yes, please.
699 rupees is the price you pay.
Yes.
But the value you derive is 1,000 multiple of that.
You know, interestingly, this is the first time in my life that I've seen that on Twitter, people are writing to me saying, why have you priced it so cheap?
So reply to them that we reduce the price so that the TAM increases. we're taking away from the time of
I
questions.
said when we create a well-informed society where all of us collaborate to each other's learning, the price will be infinite.